Hi, everybody. Welcome to another episode of the 7-Minute Takeover, where we chat all things acquisitions. We're your hosts. I'm Liz Pray.
I'm Eamon Gamble. Welcome back to a deal decode session where we've got our CEO, Rob Irwin, joining me, Eamon Gamble, today. How are you doing today, Rob?
Great. Excited about this one.
Fantastic. Today we're looking at we'll call it a micro acquisition. Now, these are deals that some folks do that are on the smaller side, but there's a lot to like about this company, and so we're going to go through whether it makes sense for you as a buyer. The company is based in Vancouver, and it's an e-commerce company dealing in the pet products industry. Rob, you got any pets?
I do.
What do you have?
I've got dog.
A dog?
Yep.
Okay. And do you buy your products online? You go to the store?
Online.
Online, okay. So you may be a potential customer for this client. They've got $120,000 in revenue and listed $30,000 in seller's discretionary earnings. And that's all that we're given on the listing. So we're going to have to determine if this one makes sense. Rob, any insights into the pet industry?
Pet industry in general, it's a huge growth industry in Canada. It's billions of dollars. It's a very loyal client base. There's decent margins in the product, and there's a lot of innovation as well, actually. So there's opportunity for sure.
Okay. So what do we like about this deal? Rob, you want to kick us off? What do you like about this deal?
I like the fact that it's sort of a one-stop shop. They've got everything from manufacturing and warehousing, the supplier connections. They've got branding. They've got 2 websites. They've got a history and a client base. These are great things to have as one company. It's not just a bunch of Instagram followers.
Yeah, and it's an operation that you can run from home. The owner has all these assets and relationships on those sides that Rob mentioned, but whether you're in Victoria or Seychelles or even Calgary or maybe across the border in the US, this is something that you can realistically run from home.
Yeah.
Now, the elephant in the room, and the reason why we're covering this opportunity today is the size. Some folks, when they're starting their search journey, like to think that maybe they make an incremental step into entrepreneurship through acquisition, buying a smaller company, learning from it, and scaling up from there. Rob, what do you think of that strategy?
Yeah, it's a great strategy. The challenge is the size, as you'd indicated. It's a tiny company, and the SDE of $30,000 on $118,000 in revenue is it's a hard way to make a living as your first walk in.
Yeah, it's we sometimes say you're buying a job. In this one, you're buying kind of a part-time gig, not a full-time job. So there's that challenge: is how much of your time is it going to take to actually earn that $30,000 in SDE? From my perspective, helping people through the transaction, the thing that jumps to my mind is how much are you going to have to pay for lawyers and accountants and other partners to help get this deal done? You may end up spending at the very bare minimum on those categories I mentioned, $30,000 in legal and accounting fees. So you're paying about 1 year's cash flow just to even get the transaction across the line.
Which is pretty crazy, and there's a lot of, and that's assuming it's a smooth ride.
That's true.
And that it's fairly prepared on the sell side as well, the documentation. It's a heavy entrance cost to a low SDE number.
Mm-hmm. And 10% growth on $30,000 is only $3,000.
Yeah, it's the math doesn't really work on that.
All right, so that's our caution on this transaction. I'm sure there's others if we dug into it, but that's clearly the elephant in the room is the size. And this advice applies probably to any company you're buying that looks like this size.
But on the flip side of the increased costs in the low SDE, I mean, it is a great company in terms of a one-stop shop. It's got client base, it's got a history. That could be a really valuable asset for a company looking for to expand their product line or to bolt on something. They would be more aware of the transaction costs for an opportunity like that, and would be able to monetize the existing client base probably at a higher rate than what is currently being done.
That's true. And listen, starting a company from zero is hard. So if you were thinking about launching an e-commerce company in the pet product space, this is probably still lower risk than
Yeah.
doing it
Yeah.
right from
Absolutely.
scratch. So I think we're circling around our verdict on this one, Rob. I think if you were to reach out to the broker, you may want to know a little bit about why the person's selling and what their real expectations are with respect to what price you're going to pay for this type of cash
Which
flow.
the price is undisclosed on this, so there's some questions there. But it really comes down to, I think, for the right buyer or the right situation, there's a good opportunity here. It's just probably a narrower pool of buyers that this would appeal.
Yeah, and if we were to list those off again, it's probably, you've got an existing e-commerce pet product company and looking to bolt on a product. Maybe you are considering doing a startup and this is an alternative. Or 3, this is really a passion product. You like pets and you're okay that it's not going to be your retirement savings coming out of this company right away.
Yep, exactly.
Awesome. Well, thanks for joining us today. We'll see you next time.
Thanks for tuning in. If you enjoyed the content, please be sure to subscribe, follow us on social media, and check out our website at villagewellth.com.